Let's get started. Hello, YouTube. Again, my name is Amanda Ryba, founder of the Illuminate Your Wealth community. I am joined today by my co-pilot, my very, very best friend and business partner, Miss Jasmine Kalanji. To my right, I'm not sure where she is for you, but she is the co-founder of the Your Wealth Guides. How do I say it? Movement, pretty much, right? Because these ladies are out there teaching people rules to money, how money grows, and how to protect and preserve it and do things tax free. So, Jasmine, say hello to everybody.
Hello, everyone. Thanks for having me again, Amanda, and your team at Illuminate Your Wealth. I'm very happy to be here to educate you on some basic rules of money and how to create a private pension plan.
We're going to
So,
have some fun today, right?
yes, we are going to have some fun. So, before we get into some numbers and things like that, we briefly do want to explain to you the three different ways your money can grow because this is extremely
Mhm.
important. We want you guys to all have a diversified portfolio, but a lot of times people think diversification is just like in different ETFs, different mutual funds, and things like that. But you should be diversified in the three different ways your money can grow. So, let me go ahead and share that with you guys. Let's see. All right, perfect. Okay, perfect, right? So, as you can see, there's three different ways your money can grow. There's fixed, variable, and index. So, your fixed accounts, again, that's probably your traditional high yield savings account. It's safe. It's good to have for like an emergency fund, maybe 3 months of your liquid money. And then your variable. Here, you guys, most people will have money sitting in a variable account. If you have a 401k, a traditional IRA, a 403b, TSP, right? Any type of retirement plan, usually they're going to be invested in the stock market, meaning your money will go up and down based off the stock market. Now, I know this year may seem like it's doing well because it has picked up, but the year before, me and Amanda helped so many clients that lost like negative 20% last year. So the thing is, it could be a little bit tricky. It may look like you're going up this year, but to be honest, a lot of the times you're just recouping your losses from the year before, right? So it's very
Mhm.
important to look at your graphs on your statement, to look at where you started 2 years ago and where you are today, because that's how the variable accounts work. And the index strategy, right, is a strategy only done through insurance contracts, right? So either an index universal life or a fixed index annuity, which we'll be talking about. With the index strategy, what happens is when the stock market goes up, your money will go up. But when the stock market goes down, you're going to be locked in your gains. Again, market goes up, you will go up. But when the stock market goes down, you will be locked in your gains, right? So, again, these are the three ways your money can grow, right? And what we're going to show you is how to potentially move your money from a variable into an index strategy. There comes a time in people's lives when I would say, like, once you're over the age of 50, you've accumulated all this wealth. There comes a time where you should be doing preserving your wealth, right? And so we're going to show you how to do that. Perfect. All right, Amanda, why don't you go ahead and talk about taxes?
Yeah, because you guys know there's only two guarantees in life, right? Essentially, it's we're all guaranteed to die, and as long as we live in the United States of America, we are guaranteed to pay taxes. But the good news is you can choose how, right? So you can pay taxes now, which is every single year in accounts basically through your bank, checking, savings, CDs. You can pay taxes later, which is anything traditionally through work, right? Those traditional 401ks, IRAs, 403bs, TSPs, pension plans, annuities, all that good stuff. You're paying taxes at retirement. But what we challenge our clients to really think about is if taxes are going to go up or down in the future, right? Because hands down today, the most popular bracket is what we call tax advantage. Because in tax advantage, you are paying your taxes up front so that your interest can grow all tax free compared to tax later, where you're going to be paying taxes at retirement when you start to take that money out. Tax advantage, you're paying taxes up front. So again, the interest grows tax free. So when you retire and take it out, essentially you're retiring tax free, which is the goal. Now, this is important to point out because today we're going to be talking to you guys about how to create private pension plans, mainly looking at taking 401ks, IRAs, TSP accounts, 403bs, and like Jasmine mentioned earlier, just bank accounts and rolling those into pension plans. Now, we get asked all the time, can you roll from like a tax later to a tax advantage account? In theory, there is ways to do it, but there's no way to do it without paying your taxes because tax later is tax deferred, tax delayed. You haven't paid taxes yet. So if you want to go from tax later to tax advantage, there are ways to do that conversion, but you are going to have to pay taxes in the years you do the roll or you do the conversion. So you got to keep that in mind because if you're trying to convert 100 grand, that means you're bringing in 100 grand as earned income in that year. You're probably going to owe 20 or $30,000 in taxes. And to my knowledge, I do not believe it can be withheld. You literally have to have cash to pay that. So that is something to keep in mind. But today, we're going to be talking to you guys about how to create private pensions, right? So I'm sure all of us at some point in our life, if we work in a career, have owned a 401k at some point, either through our job, right, Jasmine? Maybe a
Mm-hmm.
TSP, maybe a 403b, IRA, a Roth IRA, a SEP IRA, or just have money sitting in the bank that we don't need. If you guys have these types of accounts and you're no longer employed through that company, you have the ability to roll it, right? In fact, you should be rolling it. You should be taking it with you. I love the analogy of, would you leave your wallet at your ex's house, right? If you broke up with somebody, would you leave your wallet there? Heck no, right? We're going to take it with us. That's the number one rule. So, same thing with your company. If you broke up from your company, if you're no longer working there, why the heck would you trust them with your retirement plan? You wouldn't. Like, it just doesn't make sense, right? Like, take it with you. You never know if that company's going to go belly up, go bankrupt. You never know if they're going to change 401k providers. Like, anything can happen where that money could be very, very hard for you to access. So, we're going to start off by showing you an example of what we call a fixed indexed annuity, where your money is going to grow index, where you don't lose anything. So, we're going to kind of walk you through some of the benefits and the guarantees of this. First and most important is guarantees, the fact that you're never going to lose another dollar moving forward, right? We're going to lock in that principle that is guaranteed to be there when you need it. You have significant growth potential. The accounts are going to mimic the stock market, so there's a chance for them to grow really high rates of return. Depending on the situation, depending on the product that you choose, a premium bonus could be available. The ones we're going to show you today do come with a bonus for opening up the account. And principal protection, again, protection against market loss. Tax deferral. You don't have to worry about paying any taxes until you retire, right? We're going to continue to do that. And income, I believe, is the one below that. You can choose to pensionize this at some point in your life when you're ready and you're in retirement and you want to start taking income out of this product. This plan will pay you for as long as you live, income for life. And lastly, there is a death benefit. Whatever the account value is at the time of your passing, that all transfers to your beneficiaries without issue, right? Complete seamless transfer. Anything I missed, Jazz? Anything you want to add?
No, right? So just to like highlight, there is no direct downside market risk to your money, right? So exactly what we were talking about how the index strategy grows, right? It contractually says it on the contract. There is no downside market risk because again, you have the going back to this, you have the guarantees, right? And you have the protection where it absolutely says it on the contract. And then again, just to piggyback, it says income certain period of time or for the rest of your life. Sorry,
Mhm.
hopefully that's clear to you guys. So, yeah,
Mhm.
that's again, those are the huge benefits of this product. Let me go ahead and scroll down to the numbers here, right?
Let's take a look. Let's dive in. Let's see how it
Okay.
goes. So
The
these are,
60, this one's going to have an 11% bonus.
there you go, right? So if we're rolling in, what's the amount we're rolling into this one?
So in this example, we have a 45-year-old rolling over $500,000, and this one is specifically for performance. It even says performance.
Performance. Got it. Okay. So that being said, like when you're younger, right, when you're in your 40s, you're not quite in your 50s yet, you can't touch this money until you retire, right, which is another 15 years at minimum. So one good option for an annuity contract for you is a growth annuity, an accumulation annuity. There are also income annuities, which we're going to talk about next, but this one is specifically designed to grow your money with no market risk. So we're going
Mhm.
to look backwards in time, and assuming you had this annuity over the last 10, 15, 20 years, this is actually what it would have done, like in the, not necessarily in the market, but mirroring the market with the index strategy. You'll see age 45. Maybe we look over at, let's see, the columns on the right hand side. There's no RMDs yet. We don't have to worry about that, but that annual assumed interest, that's what we're earning every year. Then you're going to see three, oh, yep, look at all that. Look at all that interest. Boom, you're going to see in one year we're at 12%, then it's at 26%, then we're at zero. The zero means the market was negative in that year, so we didn't lose anything. You got 8, you got 11, so it does decent on its returns. And this is what your account could have grown to. So what you're going to notice, we rolled in $500,000, right? Year one, at the completion of year one, with the 11% bonus and the growth in the account, what's the bonus for 11%? What does that say? $55,000? Dang.
$55,000. Hold on.
That is not
right there.
too shabby. I like it. I like it. I like it.
55,000 added your first year on your accumulated value like you were mentioning.
Dang. And accumulated value is the account value. Surrender value, which is to the right of that, is like kind of like your walk away, your cancellation value. Like if you just wanted to close the contract and walk, that's what you get. This is looking at a 10-year contract. But year one, you'd be having about 624,000 inside that account. If you canceled it, you would have still made money. 522,000 is in there. And if you look all the way over to the right, the death benefit, that is always going to equal the accumulated value. Because again, if you die, your family would get the entire value of the account. But the key here is you're only 45 years old. This is a 401k that we're looking at rolling over. You can't even touch this 401k till you are 59 and a half. You got 15 years until you can access this money without state and federal taxes or penalties from the government. So it's totally fine if it's on contract for 10 years with an annuity company because you can't touch it anyways. So you just let it sit there and do its thing. Let's see where this is at by the time he's, let's say, 60. We're in
Okay,
retirement.
right around 60. Okay, so that is 60. Let's keep going. We are looking at $2.5 million. Wow.
Dang. So we rolled in 500,000. 15 years from now, they're projecting the account to be at 2.5 million bucks. What about
60.
like age 65? Shoot, where are we at
There's a
65?
picture. Yep, that was 2.5 right there. That's age 60. Okay, perfect. Age 65, we are looking at right here. Let's keep going to right there.
Oh my God.
$4.3 million.
Who here wants to retire with $4.3 million? dollars? I
$4.3 million.
I am down, right? I am down. And that is phenomenal. But how these things are able to happen is your money is on contract, right? Your money is on contract with the annuity companies. They're able to give these types of rates of return. We're going to show you kind of worst case scenario, best case scenario, and average case scenario, or I should say most recent case scenario. It's one of the things I love about this company specifically. So if you're just joining us, this is an example of a personal private pension. If this person is 45 years old, they had $500,000 in an old 401k, they want to turn it into what's called income for life. They want to turn it into their own private pension. If they rolled it with a fixed index annuity company like we're looking at here, most recent 10 years, this is what this account would have done. Would have rolled in 500,000, gets his 11% bonus for opening it up. 10 years from now, Jasmine, what number is that down there at the very bottom?
That
Did
is
I see 1.4?
1.4456 million. 1.4 million,
What is
right?
the average rate of return? 10?
The average rate of return is 10%, 10.13.
That is not bad. That is not bad. Who wants to earn 10% as they're getting closer to retirement? And the other key you guys need to know is the closer you get to retirement, the less risk you should be taking on your money. You shouldn't be in super, super aggressive stocks, things like that. You want to start to diversify into things that are going to give you some guarantees. This is a great way. This is most recent 10 years, which involved a really crappy 2022, which involved a really crappy 2020, and a semi crappy 2018. So 3 semi-crappy years, and you're gonna notice here, we got a couple years
Yeah.
of zeros, right, if I'm looking at that.
Yeah, so we got a 0 and a 0 at the last year because last year was crappy, right?
Mhm. And what did the account value do in those years where the market was
Okay,
at 0?
so when it did 0, you can notice that the numbers match.
Mhm.
1.456248 and then again 1.456248. Again, last year was negative 20%, negative 15%. Literally, we've helped so many clients move their money into this account because they lost 15-20% of their retirement. Where here, as you can see, when the market is down, your value is the exact same value, right? You did
Yeah.
not lose any money, and that's the power of these things. So this one is the most recent. It grew to 1.4 million after the 10-year contract. Moving on to the highest, if you could see it.
Yeah,
Uh,
tell us what you see there, Jazz.
okay, I know it's a little blurry. I try to brighten this up, right?
Oh, it looks pretty
Uh,
good.
okay, so we have 13.67, right? So the $500,000 in 10 years is going to grow to almost 2 million, $1.9 million. Okay,
Yeah.
this is the highest case scenario that it performed in the past 20 years. And then the lowest case scenario, we have 8.19 right there. 8.19. Right. So
That's
it
not
grew to
bad.
1.2. 1.2.
So, am I correct in all those scenarios? Even the worst case scenario, worst this account has ever done in a 10-year span in the history that it's been available, it still has more than doubled in a 10-year period.
Correct. Exactly.
How
At
cool
8%.
is that? How cool is that? And so as you guys can see, this is the power of leveraging the index strategy, the growth potential, the fact that there's a floor, a 0% floor, and this thing can only grow. And this is a great example for any, I mean, realistically for anybody, but it's really great for people in their 30s and 40s that don't want to deal with the market anymore. They want to get into things that are going to give them some guarantees, right?
Absolutely. You guys saw the guarantees where it said 0%
Mhm.
and the account value didn't lose. So again, it's all contractually guaranteed. And again, the great thing about me and Amanda is that we work with all the different A plus rated companies that have billions and billions and dollars of backing that all have been around for like 100 years, right? So they are not going anywhere.
Nope, I love it. But now I think we get the chance to look at an income annuity because there's, as you guys may or may not know, there's different kinds of annuities, right? There's some like we just looked at that are performance, some that are for income, some give some guarantee rates of return, some give a 0% floor. So Jasmine's going to show us one that actually gives you a guaranteed what percent? What's the guarantee on this
The
one?
guaranteed, yes, right. So a lot of people, they don't even want to worry about what's going to happen with the stock market, but they still want really good rates of return, right? And if you go to get like a money market, you're going to get 2%. A high yield savings, cool thing is you are getting 4%. But this one is double all of that, and it's contractually guaranteed, right? And you're going to be contractually going to be able to get an income for the rest of your life.
Okay.
They're also like, this is a really, really well-known company that's on our side, right? They're on our
Yeah,
side.
they're on our side.
So that's a hint right there. They're on our side. And they're giving a 30% bonus. 30% bonus just to move your money as an incentive. And on top of that, they are guaranteeing, dun dun dun, and guaranteed 8% for 10 years.
Dang.
Guaranteed. So, in this
Oh my
example that I'm going
gosh.
to show you guys, I have a 55-year-old with $1 million sitting in a 401k or an IRA, and they decide to move it over. The bonus of 30%, that's $300,000. All right.
Keep in mind the last one was just 11%. So this one is
This is this
300,000.
is 30%, right?
Oh my
So,
goodness.
if you guys see here, $1 million, and it says initial 30% bonus on the graph, right? So immediately, year one at age 55, right? It went all the way up to 1.3 million. And then on top of that, now you're
Oh
going to
my
start compounding guaranteed 8% every single year.
dang.
Guaranteed, contractually guaranteed at 8%. And by the time you're 65, the account value will grow to $2.8 million, and you're guaranteed $138,000 lifetime income for life. Lifetime. That means life. For life.
138,000 for life for as long as you
For
live?
for life.
You know what's crazy about this is I have met people that have
Oh,
retired with a million in their 401k and they're projected to be able to walk with like 30 or
40,000.
40,000 a year. Why can they only walk with 40,000 a year, Jen? Why? Tell us.
The reason why is because your traditional financial advisors that aren't putting you in these pension plans, these private pension plans, or these fixed, also known as fixed index annuities, it's available out there, right? They have a 4% rule, right? So whatever you have in all of your IRAs and things like that, to project how much a traditional financial advisor will tell you, they're going to tell you to take out about 4%. So what's 4% of $1 million?
40 grand.
40 grand. So, would
That's
you
it.
want 40 grand, or would you want to move it over, guarantee to grow it at 8%, and then get $138,000 for the rest of your life?
I like the 138 for the rest of my life. That's pretty good.
I like it too. And again, this is guaranteed. You don't even have to worry. We have World War III going on. We have the president election going on next year. You don't have to worry about any of that. You will be
Mhm.
guaranteed 8%. Right. And I think that's absolutely awesome. So again, if you're one of those people that just is like, I don't really want to worry about it, like who knows what the stock market is going to do, and you want something guaranteed, then we would highly recommend a guaranteed product. So that's cool thing is like you can have guarantees at 8%. This is compounded 8%, right? There's other
Mhm.
companies offering guaranteed 10%. There's so many options, right? And again, the great thing is, again, we shop and have pretty much the best index annuities out in the market we're able to offer.
Yep. I love it. But now that's awesome, right? Because guaranteed 8%, that's really hard to find. We're also going to show you guys an income annuity that doesn't have that guaranteed 8%, but that means that it has the potential to do significantly better in terms of growth and in terms of performance. So allow me to zoom in. This one also gives a bonus. Dun, 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 dun. What's the bonus on this one, Jasmine?
So this
You
one's
said
also a same client at $1 million, right? And they are giving a 45% bonus, right? To calculate your pension.
45%.
45%. That's $450,000 bonus
That's
added
insane.
to your $1 million to calculate your pension income, right? I just want to clarify this. This is used to calculate your pension income.
Yep. Good Lord. So let's see what this thing actually does. So if we allow me to find the page that shows you guys the money, because I know that's what we're here for.
Show me the
See,
money.
show me the money. That's what they say. Let's take a look. All right. So if we're showing you guys the money, here again, like she said, 55 years old. We're
Perfect.
looking
55 years old. Again, so this is past performances, right? As you can see, it still does really good rates of return. First year 10%, second year 23%. Again, third year when it shows 0%, what does that mean? That means the stock market was down, and guess what? You did not lose any money. And that's so crucial, especially if you imagine being 58 years old and the stock market crashes right before retirement, right? Well, you don't have to worry about that because again, you have principal guaranteed, guaranteed floor of 0%, right? So that's the past 10 years performances. And then if we go to the next column, right, where it says benefit base. Okay, so I really need to explain this, right? So you guys, they're not just giving you guys 45% bonus on your like accumulated value. They're using it to calculate your pension income. So you'll notice that the 450,000 goes on top of the benefit base, and the benefit base is the percentage that they're using to calculate your pension, your income that you're going to draw out of for the rest of your life, right? So after that, the column next to it is the accumulated value. Okay, so that's your physical money that is growing in there. That, like, if you had an emergency, you needed to take out money, like, that's your physical money that you could take out, right? And then the cash surrender value, again, that's the money you have access to. And then, of course, same thing like the other annuity, you have a death benefit, right? But the great thing about this specific company, which this specific company is like the number one right now in the marketplace for fixed index annuities. If you see where the blue line starts, the begin lifetime annual income, bam, right there. Begin lifetime annual income, right? So you roll it over at age 55. It's a 10-year contract. You retire at age 65. What is your pension going to be? Your pension is going to start at $191,000. $191,000, right? And then on top of that, again, this is an increasing pension. This is why specifically this company is awesome. We're going to get the following year, second year, you're going to get 211,000. The year after that, you're getting 257, right? So it's actually accounting for inflation. We all know the cost of living is it gets more expensive every single year, and a lot of people are stuck on a fixed income when they retire. But here, this specific company gives an increasing pension, right? So many times we could actually, even if you have a pension at work, matter of fact, I just reviewed a client's statement from UCLA. He's retiring. And I compared it to this pension plan, and he's getting way more in this pension plan, and it's increasing, right? So very important.
Oh.
Even if you have a pension plan at work, we could also help you review that. But again, same thing here. Every single year, your money is grow. You're taking out money at the very bottom, right? It says cumulative withdrawals is like $5 million, right? Imagine you've taken out $5 million, and you only rolled over $1 million in this one, right? So you've taken out $5 million for your retirement. And then if you actually scroll all the way to the right, showing the zeros, Amanda, right? Traditionally, if you just had your money sitting in an IRA and you were taking that amount of money that the guaranteed income was taking out, realistically, you would run out of money by the time your age. What age is that, Amanda? 77, 78?
Yep.
Right? So that's the thing. A lot of people's concern, especially like the baby boomers, is outliving their money,
Yep.
right? With healthcare advancements and everything going on, like we're like learning all the tricks to stay healthy, right? Cold plunges, saunas, eating healthy, organic, right? Healthcare advancements. People are living till 100 years old. There's so many people living till 100 years old now, right? So if you don't move
Mhm.
your money into something that offers a guaranteed income for the rest of your life, you are basically risking running out of money at retirement. So it's so important. Even Tony Robbins talks about this product, about making sure that you have a portion of your retirement to have guarantees for the rest of your life.
Yep, very true.
Perfect. But yes,
So,
and that's a power. Again, this is a privatized pension plan that you can basically get on your own if you have a 401k, IRA. Again, even if you just have money sitting at the bank, if you have a pension plan at work, before you choose your options, make sure to review it with like either Amanda or myself. We may be able to give you more money. And at the end of the day, our goal is to give you more money at retirement, right? I can't tell you. I've reviewed like so many people's pensions, and I have made it better. We have made it better. So very important, even for people at Kaiser. Actually, let me just name drop Kaiser really quick. Amanda, actually, if you want to talk about Kaiser really quick, and then we'll.
oh yes. Anybody that works at Kaiser, there's a few companies that do this, but specifically anybody at Kaiser, they offer a pension plan to people that
Mhm.
have been there for a long time. But the catch is if you're not married when you retire, you cannot list a beneficiary to your pension. If you are married, your spouse will automatically be the beneficiary. But let's say your spouse passes away, you get divorced, or you were never married, you die. Let's say you get in a car accident, like you were so excited, you just retired, woohoo! You're driving home, you get in a car accident that day, that multi-million dollar pension that you just spent 30 years building up is gone. It goes to
Back.
nobody. Yeah, that's how that works. So, if you do get a pension, I highly recommend you check these things out to see what the situation is. Always see again if you can take a lump sum from it. Definitely, if you've recently changed jobs, recently been laid off, or getting close to or already in retirement, you want to talk about moving your money. If you want somebody to talk about that with, as you can see, Jasmine and I have been doing this for 8+ years. We're not new at this, and the products keep getting better and better every single year. However, it's very important that we recommend that we mention to you guys everything we showed you tonight. These are just examples. We're not at all recommending this or saying this is what you should do. And also, everything that we showed you tonight, there's no guarantee it's going to be like that tomorrow. These products are changing on like a weekly, monthly basis. So, if you like the idea of the bonuses, if you like the idea of the guarantees, the 8%, you want to act on this stuff now because I've already been hearing that things are going to change in the new year. I don't know. You probably heard the same thing. A lot of companies are changing bonuses.
We already got a notification that the different bonuses and things like that are
Yeah.
changing the different rates that they're able to offer. Right. Again, these companies are experts at this on the back end. They know, like, they're buying things low, right? They know when things are going up, and they lock in certain stock options, calls in the back end to be able to offer these products, right? And just so
Hmm.
you know, they'll have, again, they have to have a certain amount of backing and billions of dollars of assets to be basically offer this, right? So these aren't your like traditional bank accounts, right? They have like 10x in reserve money.
Yeah, they do. And that's why this stuff is so important. So, those of you that have stayed on this entire time, we appreciate you. This will obviously be captured on my page. So, if you ever want to come back to it and watch it, please do. If you're in this situation, like share this with other people that you know that are in this situation. And if you want to connect with us on how we can tailor some options for you, all you gotta do is navigate to my YouTube page or to Jasmine's YouTube page, click the link in our bio, and click the option to schedule a complimentary client consultation with us. Definitely make sure that you mention in there that you were on this live so that we know that you've already seen some of this stuff and pull together some statements. And we're happy to hop on a Zoom call with you and show you some options and see if something like this could be a good fit. We're not saying it can be. We don't know. We got to confirm the money is eligible to be rolled over. There is some steps we got to take, but hands down, they're great accounts, right? Can't beat that. So,
And because we're on a giving spirit, right? There is, most of the times, there's no taxes, no penalties, no fees to do this, right? There's no taxes, no penalties, no fees. There might be like a small, like $25 processing fee from the company that it's coming from, but that is
mhm,
about it, right? So literally,
love
you
it.
guys take advantage of the bonus. You guys could, protect your current principal, give yourself an income for life. And me and Amanda we'll do it complimentary, no taxes, no penalties, no fees to do this rollover, right? So make sure
Mhm.
to connect with us. We are looking forward to meeting you guys if we haven't already met you guys, and we'll see you guys on the next live.
We'll see you on the next live.